Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Quant, whose current price stands at the $164.3 mark, and here on TradingView the market is down by 1.5%. and in this video I want to give you the key scenarios that I expect to play out, basing my analysis on the Elliot wave structures, the Fibonacci's, the key areas of support and resistances, and also draw out any key chart pattern that you have information on this chart. And I'll kickstart the video by giving a brief of what has been happening on this chart. Quant from the all-time high has been seeing lower prices in this massive ABC corrective movement, which has now taken us back to around the $41.2 mark, and after seeing that low down there, we saw a very nice bounce to the upper side, which has been obeying the Elliot wave structures. And if I jump to the 4-hour chart so that I can show you the key Elliot wave structures that we have information right here, after making our low down there, we saw a very nice bounce to the upper side in the formation of a first wave to the upper side, then saw a very nice retracement over here in the formation of a wave 2, then a wave 3, then I'm expecting the formation of a wave 4, then continue pushing higher in the formation of a wave 5 to complete a higher Elliot wave count 1 over here. And getting a little bit into the details of the formation of this Elliot wave structure right here so that it can give us the key scenarios that we expect to play out. After making our low down there and making our high for that wave 1, we expected a very nice retracement over here in the formation of a wave 2, and using the Fibonacci's we can get to see whether this wave 2 has done the minimum retracement requirements using the Fibonacci's by connecting the fibs from the low of that wave 1 to the high of that wave 1, and that gives me a minimum retracement area between the fib level 0.382 and the fib level 0.5, which perfectly lies between the the $87.1 mark and the $98.2 mark. And you can see we retraced into that target area, made our low for that second wave, then saw a very nice bounce to the upper side in the formation of a wave 3, and using the trend based Fibonacci we can sketch out a target area to the upper side in the formation of that wave 3 to get to see whether this high for this wave 3 could be the high for that third wave to the upper side. And I just need to connect the trend based Fibonacci from the low of that first wave to the high, from the low of that first wave to the high of that first wave, then dragging the fibs to the low of the second wave, and that gives me a minimum target area to the upper side in the formation of a third wave at the fib level 1.618, and that is at around the $238.3 mark. And from what we have here on the charts, you can see our high for that third wave is at around the $229 mark, meaning we have a $10 difference between the high we have here on the chart and the high that we have sketched out using the trend based Fibonacci. And that means there are high chances that the high for that third wave to the upper side was in at around the $229 mark, and whatever we are seeing over here in this pullback right here is the formation of a fourth wave to the lower side. And because the fourth wave is a retracement of the third wave, we can use the Fibonacci's once more, connecting them from the low of that wave 2 to the high of that wave 3 to give us a minimum retracement area to the lower side in the formation of a wave 4 between the fib level 0.382 and the fib level 0.618, and I can mark that target area here on the charts like that, which perfectly lies between the $174.8 mark and the $141.3 mark. So there are high chances that the low for this fourth wave is not yet in, because we have not fully maximized the formation of this target area over here. And because the fourth wave is also a corrective wave, I also expected to see an ABC corrective movement play out over here, and we are not seeing such a structure, a complete structure of that ABC corrective movement. Whatever I have over here is a wave A, then a wave B making a peak at around the $195 mark, then we continued pushing lower, but we are yet to make a new low in the formation of a wave C, because in the formation of that wave C I expect a low that is below the low that we have for the wave A. So until I see that movement, a complete structure of that ABC corrective movement, I'm not confident whether that low for that fourth wave is in. So I'm expecting a new low here on the quantum chart in the formation of that wave C. And getting to the key chart patterns that we have information right here, we have the formation of a wedge right here, and it's supporting that movement to the lower side, and we can have this as a trend line over here. We have this trend line over here, then you can see we have these other trend line over here connecting the highs, and you can see we have seen a breakout out of this chart pattern to the lower side, and we have continued pushing lower. And in this movement right here, which was a bit of a fake out to the upper side, it is much of a retest of this trend line over here. And once the retest is in, I'm expecting even lower prices to be coming our way, so there are high chances and a possibility of us continuing to push even lower to fully maximize the formation of these wave C and the formation of a wave 4 before we continue pushing higher in the formation of that fifth wave to the upper side. And I can sketch out a target area to the upper side in the formation of that wave 5 to the upper side using the trend based Fibonacci, connecting it from the low of that wave 1 to the high of that wave 1, then dragging the fibs to the high of that wave 3, and that gives me a minimum target area to the upper side in at the fib level 0.618, and that is at around the $287.7 mark. So that is the minimum that I would expect this fifth wave to the upper side to do once we see the low for that fourth wave. Also taking a look at the indicators to see what movements will be supported here on the RSI, we are trading at around the 47 mark, meaning we have massive room for us to support any movement to the lower side in the formation of that ABC corrective movement before we get into the oversold region. Also taking a look at the MACD, here on the MACD, for our MACD we have printed a bullish cross, and that means higher prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.